big overnight move. Let's take a look at this. Huge overnight move. So the market fairly quiet yesterday for the most part. Very choppy. And then just a huge sell-off. You can see this has the makings of a bull type flag, or pardon me, a bear flag. Countless breaks against the hard edge. This is the Eagle now, the Eagle trend trader we're looking at. Very broken up band down here, our filter. Our other tools were also looking, excuse me, very bearish or very choppy. So these are the kinds of things you want to get used to looking for. And then we had our trend change signal come in right here after a very nice test of the extreme. And this would be a few minutes after the London Open. We did have a rule of 3 break here. We actually had several breaks against the hard edge, but rule of 3 preceded by a test of the extreme. So you could have been a little bit more aggressive. Honestly, I probably would not have sold it until below here. But even if you didn't sell it there, we did get a trend change signal right here. And then just look at that, free fall all through the overnight into the open. So all this through here is going to look like a gap to the market this morning. Now, when a market sees a gap like this, it's going to do one of two things. It's either going to treat it as an acceleration gap, in which case it's going to keep going the same direction without looking back, or it's going to try to reverse and fill this gap. Peter writes, it looks like bottoming action. And that could be, Peter. It could be that we're looking at the market trying to get into this gap, but it's a little bit early to tell just yet. Let's take a look here at our Hawk scalper. And this is going to show us the same thing, just a major sell-off. Several wonderful opportunities to get in if you were trading in the overnight. Most of those being first micro-macro cross signals. So we get one right here. We get another one right here. Now remember, the first micro-macro cross occurs when everything goes out of sync and then comes back into sync. Very reliable signal. Here's a macro pullback, which also happened to be a 4-arrow consolidation. Very strong signal there. Everything was working last night. Another macro pullback. Here's even a green bar sell that worked out. If you avoided that, you had a first micro-macro cross here. Another macro pullback here. My goodness, you had a week's worth of trading over the span of a few hours. Another 4-arrow consolidation here. Another macro pullback here. Now this one gave you a little bit of heat. You would have had to keep your stop a little bit further back. But once again, even if you were just hanging out for the first micro-macro cross signals and the macro pullback signals, you had more than enough trading opportunities. And then here we are now. So things slowing somewhat. Looks like they had their fun and now they put on the brakes. Okay, well, we're going to be sitting on our hands for a little bit, I think. So give the talking heads lots to work with. Everybody's going to be scratching their heads. Well, probably not. They'll be blaming something. I'll see here in a moment if I can find out what it is they're blaming. Greece, maybe. I know Greece is in the news again. The weather. I haven't checked the weather yet to see. Everybody in the east is hunkering down for a big snowstorm. I'm just reading a commentary here, and someone is writing about how the way the markets were trading yesterday, you'd think that an asteroid was going to hit the U.S. eastern seaboard and not a snowstorm. And they're pitching Valentine's Day already. Well, I guess it is a couple of weeks off, isn't it? Uh-oh. Ah, balmy day in Western Australia. Phil says it was 42 degrees here in Western Australia today, and it's still 28 degrees at 10:40. Folks, that's Celsius, not Fahrenheit. So that's well over 100 degrees Fahrenheit. 28 degrees is, well, it's nice. 28 degrees is a very pleasant summer day here on the Pacific West Coast. 42 starts to get a little bit toasty. We were down in Mexico one year in the Baja. And it was in May, because at the time we worked at a ski resort, a local ski resort. We had an accommodation business where my wife had the accommodation business where we rented out ski accommodations. So after the ski season, we'd had enough of snow, and we got in the car and we drove down to the Baja. And yeah, there were several days that topped out over 40 degrees centigrade. And I would move from the lounge to the pool bar, back to the pool, to the lounge. I felt a lot like a salamander, not wanting to do a whole lot. Okay, here's the Raptor now, and we're getting a cell signal coming out of the band, and it looks like we're working on another warning dot. So what I might do is, this is the type of trade I think I would want to see the market take out all the support down here. Let's see how that works out. Okay, that would align with our second warning dot. This isn't the strongest looking formation. I'm trying to capitalize on a lot of this downward momentum, and I'm hoping if the buyers are digging in here, they're going to dig in before the market fails at the low. And that does look like what was happening there. Okay, so we'll scrub that order at the moment. All right, now this is interesting. A pink blue. You know, I've been watching these yellow blue soft edge bounces as a possible counter trend trade. This one here obviously did not work out. This one here worked out not too bad. I can't say I've ever seen a pink blue combination. And once again, I'm not interested in getting you all keyed up looking for counter trend trades. I much prefer you watch for with trend trades. And for those of you Raptor traders, if you notice anything that happens on a consistent basis, signal-wise, please share. I would love to hear about it. Right now, we're still sideways. We're still stuck. Pretty much in the range we've established since the open. That's kind of where we're playing, right there. I think if we're smart, we might wait to get outside of that. Mishka says they blame it on earnings data. It was a disappointment. That's a huge disappointment. Oh my gosh, that might be the understatement of the week. All right, the Hawk's starting to give us a little bit of first micro-macro cross action as we get back to the top end of this trading range. right, once again, you see all the yellow bars. See how the filter is breaking up. This is very reminiscent of yesterday's trading. We're working on a red bar buy. Might dial down the risk amount there. Now the red bar buy, I can anticipate where my entry is going to be. So my entry is right here. A lot of times we took a tick slip on this also. A lot of times I'm going to run my stop a little bit tighter. When I only run a single contract though, sometimes I'll double my profit objective. Oh, looks like if we're going to get it, we're going to have to challenge those highs right there. Now I've turned my stop strategy off because it was on the wrong side of my trade. Now notice we just hit our high probability profit target. Now we're taking a little bit of heat on this trade. I'm looking for the next swing up. That's going to show me that the buyers are more serious about driving this market up. There will be one more swing up. Oh, come on. Get up there. Oh, you're kidding me. There should have been a push higher somewhere around here. The buyers are late showing up. Really? I guess I should have taken the $50 when I had it. Wow. Okay. So that was a lot like stepping in front of a bus. Okay, the buyers definitely do not have control. And here come the sellers. We're getting a sell signal, or just got a sell signal on our eagle. And, you know, it's a hard edge bounce, a green bar sell. These are fairly reliable signals. I was too late to take that one there, but honestly, I probably would have waited to get outside of this range anyhow. Now, when you're inside a trade, a range like this, I'm going to disengage that just for a moment. Once the market breaks outside of these ranges, so here's our trading range. If the market breaks to the downside, we can normally anticipate a reaction as it gets through. Once it does that reaction, we can usually expect another signal. Now, the reason I'm trying to hold my stop a little bit here is to allow for this reaction. I'm trying not to get my stops in so tight that I get stopped out before I get a chance for this part here. And vice versa, if it broke to the upside, we should see a reaction to the breakout before it heads higher. I'm going to turn my preview on just so I can see where my stops are. And I believe we had a similar opportunity here on the Raptor. Oh, we did too. We had a with trend signal coming out of the band. Actually, that was also a double pullback into the band, coming out of the band, which tends to be a Pretty reliable signal for the Raptor. There's still opportunity to get in here. You could certainly sell it below the low. Remember, at the end of the day, the hash mark is a suggested entry. Never mind, well, this one is really kind of a ridiculous entry, signal-wise, because our signal generated here, we could have easily found our profit target before we encountered the lows. We're only looking for 20 ticks for our first target. So this is definitely a signal you should have taken on the hash mark, because to postpone the signal would not have made sense. You would have given up almost your entire profit target before you even got into the trade. So it's one of those things where logistics starts to come into consideration. Okay, so now we're seeing that reaction to the breakout, and hopefully we'll see the sellers recommit. Peter says the YM and the Russell are very choppy and sideways also this morning. They're just dipping their toe in the water. We had a trend change signal occur right here as the market was flip-flopping a little bit. Another trend change signal here, preceded by an early trend change signal. So actually the Falcon being the performer this morning more than the Eagle or the Hawk even. Getting a lot of double dots building here, which is characteristic when the market starts to go sideways. But even here on the Falcon, you can see your trend line looks pretty much like a roller coaster. Crude oil not very encouraging at the moment. It too is a bit of a mess. Here's the Eagle on crude oil. Looks a lot like our NASDAQ chart did yesterday, doesn't it? Very, very choppy, very broken up, filter all over the place. These are the kinds of days, if you're going to trade this sort of nonsense, you're pretty much, it's a hit and hope type trade, right? It's like throwing a dart. You put your order in, and if it works, great. You've got a 50-50 chance, I suppose, that the order will work. now I have certain luxuries here in the trading room. We're working on a macro pullback signal which just tripped. This tried to be a 4-arrow consolidation. You can see this signal here did not trip. So technically this is the 4th arrow down here. And you could cover it up there above this little swing high, which should make for a fairly reliable range if the market continues lower. Just testing the waters, no real commitment just yet. And I think what I'm going to do is I'm going to dial this back a little bit. Stop that. We'll disengage you for a moment. Oh, and here they come. So here's this yellow-blue combination, which tends to preclude a move back to the hard edge. All right, that looks like where the sellers are digging in, so if it fails there, that's probably a good spot to get out. Just very weak signals this morning, folks. You know what? I'll tell you if something is looking strong. Right now, everything is just very weak. And here we go. So they're going to try to take it back to the hard edge now. Or they should try to take it back to the hard edge. Oh, I still have my targets dialed down here on the hawk. My risk percent is still dialed down. So the good news is I'm only risking 1% of my account on these feeble setups that we're seeing this morning. This macro pullback actually worked out quite well. I was a little bit slow getting to that one. Here was a red bar buy failure that you could have taken advantage of. Yeah, just very little follow through on anything. Here comes our first micro macro cross. And they're not going to follow through on that either. Well, you know, when you get a day like this where everything you try fails, no word of a lie, this is the kind of day where if I try like 3 trades, quality trades, I'm not talking about the trades that we're kind of horsing around with this morning, but let's say I took 3 signals that should have worked out, and I fail on 3 trades that I know should have worked, I will not trade the remainder of that session because something is going on that's not quite right. Great question here from Mo. Mo asks, Eric, do you follow the ES, that would be the E-mini S&P, at all, or do you primarily trade the NQ, and why? Great question, Mo. I actually watch the E-mini on a separate chart. I don't trade I favor the NQ over the E-mini primarily because of the tick value. As you know, the E-mini trades at $12.50 a tick. The NASDAQ trades at $5 a tick. And what that does, it gives me a little bit more flexibility on my trade management side. And what I mean by that is, okay, here is a first micro macro cross to the upside. Notice, even at 1% of my account, I can get into this trade with 2 contracts. Remember, this is $5 a tick. If I were trading the E-mini at $12.50 a tick, I might be able to get in with 1 contract. And depending exactly how far I placed my stop back, I may not even be able to take that trade at all. If I go back here to my 2%, and this is where things get a little bit more interesting, notice I can take 4 contracts with the NQ. So that means the E-mini, for the same amount, for the same risk amount of $400, the E-mini at $12.50 a tick, I can take at most 2 contracts. Now, our profit objectives remain the same. So whether I'm using the E-mini or the NASDAQ, we still have the same high probability profit targets. In fact, to be fair, I should put this on the hash mark because that's how the profit targets are generated. So with we've got $50 profit objectives, and I'm sorry, I'm not doing the best job explaining this morning. If I take this trade with the NQ, you can see that I can take 6 contracts. I'm going to make $300 in profit. If I trade the E-mini, I can probably take 3 contracts. Well, at my $50 profit objective, I've made $150. So I can actually earn twice as much money on the NQ as I can on the E-mini. And the NQ and the E-mini, even though they don't walk lockstep together, they do move very closely together. And the NQ has got plenty of volatility behind it so that I can take advantage of that volatility. Now, a second perk is that because I can take more contracts given my account size, it also offers me more management options. So let's take a look. Say we're going to take this macro pullback trade. Once again here on the NASDAQ, risking the full 2%, I can take 4 contracts. With the E-mini, I would probably be in with 2. So not only do I earn more profit here on my profit objective, I'm going to do a 50-50 trade, or I'm going to try to do a 50-50 trade. But it also gives me a couple more management options. Let's say I'm going to take 50% profit on the first target. Let's say I want to take 30% on the second target, and I'm going to set up my targets like so. 10 ticks on the first, 20 ticks on the second. Here comes a red bar buy. So with the NQ now, once again, I've got more management options. I'm going to take half my profit target on the first target. If I were in the E-mini now, I would have started with 3 contracts. I would have perhaps taken profit on one at the first target. That leaves me one more contract to manage. But here in the E-mini, or in the NQ, I could start with 6 contracts. I took profit on 3. I've got a second target to take profit on 2 more, and that still leaves a runner in play. So I just find the management options, especially relative to your position size, much better in a market like the NASDAQ. And the NASDAQ has got plenty of volatility for day trading. I think it's the ideal market for day traders. I'm going to roll this one to break even. The mini Dow is a close second. And again, the mini Dow is not going to do anything that the E-mini is not going to do. So you're not going to see the E-mini bolt and the mini Dow stay behind. That's not going to happen. But again, you get that $5 a tick option. It just gives you a lot more opportunities, I think, for earnings, and definitely a lot more opportunities for trade management. I'm going to put the E-mini here on my other chart, and we'll compare them side by side. But that's a great question, because I know the E-mini is very sexy, right? A lot of people like the E-mini. Let's face it, it's the king, right? The E-mini is the market that everybody wants to trade. But don't ignore some of these other markets, like the NQ or even the mini Dow. Because sometimes they're going to give you opportunities that you would not have if you were trading the E-mini. Yeah, Mo says, I can see where the E, S, and the YM almost move alike, so that would be the E-mini and the mini Dow. There was a fellow a few years back, he passed away a few years ago, Marsh Jones. And Marsh had a trading system that he traded where he wasn't even watching the charts. He would be watching the time and sales, and if he saw a spike, he noticed that when he saw a spike in the NASDAQ and the Dow, the E-mini would follow. So he actually found that they moved ahead of the Dow. Okay, so here is the Hawk Scalper on the E-mini, and you're going to notice that instruments trading at 1250 a tick, we use a slightly different brick size. We're going to use a 4 tick instead of a 6 tick on the Hawk. Here is a red bar buy signal. Now let's compare that with what we just saw. Okay, so at the full 2%, I could take 3 contracts here. I need to adjust my target. If I traded 1%, could I still do that trade? Okay, I could. So at 1%, I could take this trade, but it only gives me 1 contract to trade. Whereas in the Dow, the NASDAQ, if I traded 1%, and I did a similar setup, so somewhere probably we were long about here and covering below the lows. Oh, well, I can only take 1 on this one also. But you're going to find that given the brick size or the dollar amount, you will have more options on the NQ or the mini Dow. So that's why I prefer those over the E-mini. And like I said, they all move in unison anyway, so it doesn't matter whether you're looking at, see, here's a perfect example. So here's the Falcon on the E-mini, here's the Falcon on the NASDAQ. We're getting a trend change signal on the E-mini. We're getting a trend change signal on the NASDAQ. So it's not like you're going to be left out of anything if you follow one over the other. See, if anything, you can see the NASDAQ is moving slightly ahead of the E-mini. So if you are trading the E-mini chart, actually that might be a great idea to watch the NASDAQ. It's almost going to be like a crystal ball. You'll have a few seconds warning, and then you can take your trade on the E-mini, just like Marsh Jones suggested. And here we coming back with a sell signal. This is actually, the E-mini's a little bit faster on this particular signal. I don't do it so much anymore, but I used to also follow a 30-year bond chart when I was trading the indices. And that's just because the bond traders they're a clever bunch. It's pretty hard to fool the bond traders. So the bonds and the stock indices tend to have an inverse relationship. So here's a trend change signal before I get into it. Here's a trend change signal that's showing some promise, but still the market, look at this, all over the place, the filter all over the place. If you're going to take this trade, you've got to protect yourself. You've got to dial down your risk amount somewhat. So what I would do is I would watch the bonds. If the stock market was falling off, I would expect the bonds to rise. If the stock market fell off and the bonds held steady, I would expect the move to fail. Now, even that relationship, which tends to be fairly reliable, is not true 100% of the time. There were times that I would see the bond market and the stock market rally or decline together. Dan is asking, what about the currencies? Great question, Dan. Currencies are great. The euro, probably the best one, or one of the best ones for day traders. The problem with the currencies for us is that most of the currencies are queued up for the European markets. So when you're looking at things like the euro, the British pound, the yen, a lot of those are going to be most active during the overnight session, because of course that would be their day session. I'll pull up the 6E here for you so you can take a look at the euro. And we get some very solid signals out of the euro. So yesterday or last night, very strong session for the euro. Look at this. You were trading with both hands. Would not have got a lot of sleep last night. Going both ways. There were great opportunities. First micro macro cross signals. Just tremendous follow through on the trend. Practically right out of the London Open. Just boom. Here we are, first micro macro cross signal to the downside. You can see they've slowed somewhat because this would now be toward the tail end of the European session. Here is the eagle on the euro. Nice trend change signal right here. Great follow through. Hard edge pullback. A hard edge bounce comes out with the signal. Great follow through. Now they're also working on a possible trend change. The British pound is, I'll pull the pound up here so you can see. The British pound is also an interesting market, but it can be insanely volatile. I have a feeling if the euro trended like that, we also had a good session in the pound. So let's take a look at that, because they will, again, have a tendency to move together for the most part. I know the pound is, a creature unto itself. All right, so you see how this is my eagle. You see how my session break lines, well, this one's not bad. But did you notice how my session break lines are getting a little bit tight through here? If this continued, I would probably dial down my brick size from the standard 12 ticks to 10 ticks. But here on the eagle, we had a hard edge bounce, a red bar buy, which we know to be a strong signal. Exceptional follow through. Could have even used this as a position trade of sorts and held it through the overnight. Of course, that's much easier to do in hindsight. Let's take a look at the Falcon, see what kind of Falcon trades we had on the British pound. Oh, lovely trend change signal. Came in the middle of the night, or at least my middle of the night. Not as aggressive out of the London Open, a little bit more sideways until they finally decided to choose a direction. But once they committed, they're pretty committed at the moment. We are working on a possible trend change signal here to the downside, but you know what, given that move higher, I don't know if I would get that aggressive on the buy side. Or sorry, on the sell side. And here we are with the hawk on the British pound. Nice little first micro macro cross there. Only got a 3-arrow consolidation. Now I haven't followed the pound enough to see whether a 3-arrow consolidation is more common or a 4. Nice thing about the pound is it trades at 6.25 a tick versus 12.50 a tick for the euro. And so, like the E-mini, you kind of get a little bit more bang for your buck, so to speak. might leave the euro up for a little bit. We'll follow the euro today. Maybe we'll get something interesting out of that. Okay, it looks like we actually managed to ride out a few swings here. Just very, very choppy. And note to self, I will do this. I will hold my stops for an insanely long time when the market is moving sideways like this. Now, honestly, I probably would take it to break even now, but remember your initial stop when you set up your trade, you are risking an amount that you can afford to lose. Regardless of your account size, that's the whole point of using the trade manager, is that you never commit yourself to a position that you cannot afford. So even if I hold my stops up there, if I recognize that the market is very choppy, this gives me a lot more staying power than had I started wiggling in my stops. You can see I would have taken a small loss here. I would have generated another sell signal, pretty much the same place we got in before, and now the market would be threatening my stops again. But there's a lot to be said for being conservative when it comes to rolling your stops. I've shared with you guys before in the room that perhaps my worst habit as a trader is my tendency to tweak myself out of a perfectly good trade. And to that end, a lot of times I'll even leave the room and just let the trade do what the trade will do. And you'd be surprised how many times I come back to a profitable position just because I haven't micromanaged the trade. But this one's had several opportunities now to get to its profit objective, and it's probably time to take it to break even. Or, there's always the close button. So if you're flashing a number here that's dear to you, then you just grab it. Just hit the close button and grab it. You should feel good anytime you take a profit. Big profit, little profit, it doesn't matter. You should be pleased with yourself whenever you can take a profit out of the markets, especially on a day like today. Just watching the euro, we're starting to get a rule of 3 break. This is technically only 2 breaks against the hard edge, but we have had something resembling the test a bit of the extreme, and now the market potentially reversing. I would be more interested to sell though below these lows here. So I'm not going to jump on board just yet, but we might see a reversal. Notice that these lows coincide with these lows, so we know there's some active buying going on here. The sellers are getting more aggressive. The sellers used to be content to sell up here. Now they're giving it a go right here. We'll see if they're able to actually move the market any lower from there. All right, we're getting a trend change signal here in the Falcon, which is a touch late. Normally we like to see these trend change signals occur right here. So we get, actually this is a better example. So the trend line changes. There's the move lower. Here's the move higher. Here's the move lower. We normally like to see these occur somewhere near where the market pivots. So there's the trend change signal, and that tends to have a little bit more follow through. Compare that with where we are now, where the swing was back here and the signal generated down here. Now we've gone into green bars, so we're working on a trend line touch now. So that signal actually did not engage. If you're ever wondering which is the most effective stop strategy out of your assortment, believe it or not, it's the swing high-low. This is the most fundamentally sound stop strategy. The problem, of course, is that sometimes it can leave your stop a long ways away, but it will hold you in the market for the longest time. So let's take a look here at this opportunity that we have. The best signal was right here as we came out of the band. You can see we had the double pullback again. You should look for the double pullbacks on your Raptor. Oh, I gotta engage my stop or enable it. So you're going to notice once this bar finishes either higher or lower, I'm going to get a stop placed right up here. This is now on the Trailblazer. The Trailblazer will insert that automatically. and you're going to notice that this stop strategy is going to give us maximum staying power, but it does demand a little bit more. Here, let's see how far we can run it. It does demand a little bit more management on your part, because you can end up with a huge amount in open profit and have just a huge stop to the upside. Okay, so we should be right there. We would have hit our first profit objective, or our profit target, had we been all in, all out. And you're going to notice as we, well, actually, we've got to establish a major swing here. Currently, I have it set at a strength of 5. What that means is that there's going to be at least 5 bars going into the swing. That's why it did not roll down here, is there's only 3 bars going into the swing. Yeah, Tom pointed out the Raptor gave us a 2-step into the cloud and a first sell a few moments ago. That would be this signal right here, folks. This is a great one to watch out for on the Raptor. Tends to be very reliable. Okay, we're getting a pretty serious sell-off now in the NQ, so it looks like all that early morning choppiness, they've made up their minds to continue the overnight downtrend. Now this is a great exercise also when you are in sim and you're debating what stop strategy you want to use. You can see that, well, I can't really back test very well with this particular strategy, but you can see, had we taken some of these trades with the swing high-low, or pardon me, yes, the swing high-low strategy, we probably would have been able to ride out a lot of this mess. Like, say we had shorted here, we probably would have rolled stops here, and we would have been stopped out at break even. So then we have another opportunity to sell here. Stops would have been up here. And yeah, we would still be in this trade from way back here. It'd be a little hard on the nerves, and you'll want to keep the antacids handy. But it's a great way to learn, a great way to, definitely something that you want to journal in your trades or in your trade journal as you're comparing stop strategies. So next time you know, when the market seems especially sloppy and chopping all over the place, maybe the strategy to use, or the preferred strategy, is the swing high-low. I'm curious now that we're in this and that we seem to have regained the trend, how far it might actually hold me in. And of course, you always need to use common sense, right? Always let your pocketbook be your guide. Oh, while I was jabbering away, we had a fantastic late filter entry here on the E-mini, or E-mini, Euro. Huge move to the upside here. Nice little bounce off of the bullish resistance line. Market pulled back into it, came out of it, generated a late filter entry signal, or even a trend change signal, however you wanted to see that. and then took off like a shot. Now we're getting this triple dot at this other resistance line. Okay, I'm definitely going to be keeping a closer eye on the euro. That was a fantastic move. Okay. James is asking, I see that you don't use the moving average line on the Raptor. If you're referring to the band that we have here, this is actually the Eagle band. This has been transferred over from the Eagle. And I use it as I do on the Eagle. I use it more for a directional bias. I look for hard edge bounces. I look for soft edge bounces. I look for when the market enters the band and then comes out of the band, which tends to be a pretty reliable signal for the most part. But that's how I tend to use it more. Yeah, James is saying, oh, I thought it was a filter cloud. No, not so much. It's more for directionality, really. Oh, look at that. So I guess there were 5 going into here. Why did it not count 5 here? 1, 2, 3, 4. Oh, I guess that one was traded lower. 1, 2, 3, 4, 5. That one traded higher. Computers. So we'll see. According to the computer, that was a major swing there. We'll see whether or not that's true. We've managed to lock in a little bit of profit based on that swing. Just seeing a major sell-off in the NQ. Oh my gosh. Okay, now things could be getting a little dicey. Okay, we're up 300 and change. Remember, folks, at the end of the day, it's your money. So if this figure here that's floating around is something that's giving you sweaty palms, hit the close button. Just take the profit. Right? If you're looking at this and you're seeing $300 versus $65, yes, $65 still a good profit. But really, we all have a pain threshold. Mine's usually 500, by the way. If this hits $500, I'll take it. I'll take 500. On a single contract, are you kidding me? I'll punch out in a heartbeat. But at the moment, I'm kind of curious to see how well this swing high-low strategy is going to perform. Wow, the euro on a major tear to the upside. Huge, huge move. Oh, we're getting warmer. Okay, I hear some more scalp signals brewing. Oh, we had a nice little 4-arrow consolidation right here. Major sell-off. First micro-macro cross right here. Another big sell-off. So we had some opportunities, providing we had the sense to sit on our hands most of the time. As traders, we can't help it. It's human nature, right? We get anxious. See, this is the hard part now. My cousin who doesn't trade says, wow, Eric, if you sold it up here and you took profit down here, and then, he says he's always trading the swings, right? He's always trading in hindsight. And in hindsight, it looks oh so easy. But I remind him that when you were up 300 and change down here, do you have the nerve to let the market claw back against you, taking all that paper profit away? Because it's not profit until you close out the trade. And I know him. I know he doesn't have the stomach for it, and very few do. And there's nothing wrong with it, but I think you need to recognize what kind of trader you are. Because unfortunately, we cannot trade in hindsight, can we? Not until I perfect my time machine. Okay, so you can see here on the Falcon, we're working on a potential trend change signal. I would not get too aggressive on the buy side. Not yet. This market has just been in a tailspin since last night. It might recover a little bit. Let's see how deep into our... Oh, look at this. We've almost used all our support and resistance lines. This is extremely rare. We've only got 2 lines left to go. This is one of the biggest moves I've seen. Only one other time, I think actually it was the NQ, traded this deep into the assortment. And I think one time crude oil actually traded right through the last line. So what I'm saying is we're in a major downtrend, even though there might be some sort of profit taking, some sort of rally to the upside. I'm not sure it's anything that we really want to get overly aggressive on. Okay, here's another one of these red-blue combinations that we saw before. And it actually led to a pullback to the hard edge. Here was the red-blue. I think that's what we're seeing right now is a little bit of profit taking. Great question here from James. Jim's asking, would you add to the NQ when it hits the bottom of the cloud, close to the short area that triggered? I can tell from James's question that he's been probably trading for a while, because that's a common strategy to try to add to your position that way. And what we should do tomorrow is I'll show you how I like to add to a position. So somebody please remind me, but and I'll give you an overview here in a moment. But what a lot of traders will do, this is why trend lines are so popular, is a lot of traders will draw a trend line like this. And then as the market gets closer to the trend line, they'll have sell orders up here at the trend line. Now, to enter those sell orders, you have to use a limit order. The problem with using a limit order is that if the market does not get to your limit order, it can take off without you, which is why I tend to use stop orders instead of limit orders, because a stop order, the market needs to trade through your price, and you're hoping to pick up momentum as the trade progresses. So what Jim is looking at is he's looking at the signal that generated here. We're back into the cloud, and he's suggesting, well, it was good enough to generate a signal here. Maybe I want to sell, just either hit the sell button or go in with a limit order and sell at this particular price. We don't normally do that just because the conditions have changed from when this signal has generated. If it comes out of the band now and generates another sell signal, then yes, we would be interested in selling that. But we don't normally buy or sell based on old signals. Now, I'll give you the overview of how I like to add to positions. And we actually had a couple opportunities here. I was playing with the stop strategy a little bit more. But if we have a market, okay, here's the nice thing about adding to your trade. Let's take the hawk, for instance. So here's a first micro macro cross signal. Normally what you see me do is I set my risk parameters at 2% of my account. Stop it. And I'm normally all in, all out. All right, so my trade looks like this. If this trade goes sideways, I lose $450, which for my account size is an amount I can afford to lose. It may not be so for your account size. If you're trading a smaller account, the loss might be $150 or whatever the case. But the important thing to remember here is that it's 2% of my trading capital. So even though it is an amount I can afford to lose, it would still be rather unpleasant. So I know I can have about $450 at risk. So sometimes, as an alternative, you could look at testing the waters first and then adding to your position. And to do that, we normally go with 100% runner on the trade because we're going to be adding, we're going to be trying to carry on this trade as long as possible. So more often than not, I only start off with a single. So if this trade goes sideways, I've only lost $75, which, is very appealing. And when you hit a day that is trending, this is a great strategy. If you hit a day where the market is going sideways, it can be very frustrating. But you are minimizing your risk exposure, so I suppose there's a little bit to be said for that. In a choppy market, like what we experienced yesterday or even the first hour this morning, an all-in, all-out strategy would still allow you to realize some profit because chances are the market's moving at least far enough to hit your profit objective. This strategy that I'm about to show you is great when the market actually takes off, but in a choppy market, you're going to be leaving money on the table, open profit that you could have had, because the market just isn't moving far enough. But anyways, let's continue on here. So the market continues lower. I tend to add to breakouts of obvious swing points. So if I'm currently short here, if the market continues lower, I would add a position here. And this would have worked out well. And then I would set up to add another position here. I would set up to add another position here. And each time I'm adding a position, I'm also rolling my stops in, right? So my risk exposure at this stage, I would have, okay, so I have 1, 2, 3. I've got 3 open contracts. So I want to maintain that my risk is never going to be more than the 2% of my account. Okay, so we never engaged the fourth one, but that's how I would add to it. And it can be a very profitable way to trade, providing, of course, the market has a little bit of a trend to it. But we can try some of those tomorrow, and we can see how we make out. That's the best way to learn what really works, is just to play with it. Okay, so it looks like here on the Raptor, we did get that pullback signal, and it looks like we are heading back here to the hard edge. The swing high-low strategy was great for keeping us in the trade, but not so great for maximizing our profit. So big trade-off there. And there's no ideals. There's just what works best for you. At the end of the day, folks, it's your money. So if you want to take that profit, take that profit. Never ever be shy about taking profit out of a trade. Crude oil still content to go sideways. All right, well, we're getting a possible trend change signal here. I don't know if this is worth even giving a go just for amusement's sake. See, we're getting a little bit of buying pressure here because of the higher swing. It is a trend change signal after all, but there's been so little follow through. Oh, they're trying. I think it would be prudent to hold this stop back a little bit, just below that swing. Oops. Look at this. They will give it a bit of a push. Come on, get up there. Let's go. Come on, we'll give it a little bit of a push. The market's seriously slowed, as you can tell. I don't know if there's some news on the horizon or why they're as wacky as they are this morning. Okay, I would probably roll my stop at least below here. And as we get a little bit closer, I'd take it to break even. Oops. Hooray! Oh my goodness, that was a lot of work. Whew. Oh, look at this. Here we've got this trend line that we shot from way up here. Guess where we can anticipate a reaction? Yeah, James says uphill battle for the longs. Absolutely. We're going to see a reaction here around the 41.67 area. All right, well, you know what, folks? Things have slowed down a little bit here. I think we might button up the room for the day. If you are trading this afternoon, I think the short side is the only side to be trading. I would not get overly aggressive here to the upside. Like Jim said, it's an uphill battle for the buyers, I think. But don't be surprised to see the market move sideways for the rest of the session. I know I've said this before, and then it will take off like a shot, but that was a pretty substantial move to the downside. I think it's going to take a lot for the buyers to press the market higher, or even the sellers for that matter, to try to push the market much lower than it's come already. And on that note, we'll button up the room for the day, and tomorrow is Wednesday. Remember, it's going to be the public room, so we're going to meet over in the other room Wednesday morning. We'll see you guys then. Bye for now.